In this video, we're going to go through and look at a simple Forex trading strategy for beginners. So if you're completely brand new to trading, you don't fully understand everything that's going on, first of all, I'd encourage you to check out the rest of the videos on this channel. We've got a huge amount of content for you that really will help you to succeed. But this video is all about a simple but effective trading system that you can use in Forex markets, that you can use in stock markets, that you can use in stock index futures, that you could even use in commodity futures if you wanted to as well. The only thing that I wouldn't really use this in is very illiquid stocks. If you're looking at very illiquid stocks with huge bid-ask spreads, it's about the only market that this won't work in. The rest of them, this works like gangbusters. So let's dive into it. So for this simple system that's specifically designed for beginner traders, I'm on a daily chart. Now, one of the biggest mistakes that beginners make is jumping down to 1 minute, 2 minute, 3 minute, 5 minute charts and trying to trade. It is incredibly difficult to day trade successfully. Okay, not a little bit difficult. I mean, like, it is really, really hard to trade 1 minute, 2 minute, 3 minute charts profitably. And if that's where you're starting out, you're probably just going to lose money. So one of the first things that you need to do as a retail trader that's relatively new to this is stop trying to make $1 million by this time next week. Jump up to the daily charts, and that's where you're really going to have most of your success. Now, I'm not saying you can't trade smaller time frames, but make it easy for yourself when you're first starting out, right? Now, I've got 2 moving averages on here. I've got the 8 moving average in that yellowy gold color, 20 moving average in blue, and they are going to be your trend filter. Now, I don't know what level of ability you're at right now, but let's keep things really, really simple. If the 8 is above the 20, you assume the market is in upward trend. If the 8 is underneath the 20, we assume the market is in a downward trend. You don't think about it. You don't use your brain. You don't do that dangerous thing and use discretion. 8 above 20, you are in buy mode. 8 beneath 20, you are in sell mode. Now, this is a nice big upward trend to look at, which actually isn't, to be fair, isn't all that good with regards to signals. I'm on the Nasdaq, but I'm going to jump through some different currencies as well. Now, the specific approach is to look for pin bars. I'm just going to add a couple of arrows to the chart so that you can see them now. We've got pin bars. And I'm just going to add a couple of arrows to the chart so that you can see them now. These are pin bars on the way up in the upward trend. Now, one of the things that you need to understand about trading a lot of different markets, whether that be Forex, whether that be stock index futures, commodities, whatever it happens to be, when you're first starting out, trading for 3, 4, 5 to 1s is a little bit silly. All right, particularly when you're talking about Forex. Okay, you are actually much better off trading 1 to 1s and having a equal size win to loss ratio. And the whole reason why I'm saying that is because you're going to have a higher success rate. And you don't realize how psychologically important that is, especially when you're first starting out. Now, this is a rules-based approach that's suitable for automation, works on the majority of markets, and it's something that you can actively use to make money. Now, is it going to make you millions overnight? No, it's not. Is it going to make you millions in the next year? No, it's not, unless you happen to have a ton of money up front. But it is going to be your first system that you can actually use that is profitable, and you can look to add on top of this. Now, it's low frequency, there's not huge numbers of trades, it's not even going to make money every single month. There's going to be occasional months that it loses money. But that's realistically what trading looks like. If you're looking to print money every single day, go and buy a course from some guru that wants to charge you the earth, and you'll realize very often that a lot of that stuff doesn't work. These 95% success rates that they claim, or 87% success rate, that stuff's rubbish. Now, with regards to the specific system, the rules are as follows. The pin bar itself, in an upward trend, the low of the pin bar must be touching or underneath the 8 moving average. So on the pin bar, okay, the low of the pin bar must be touching the moving average, the 8 moving average, or beneath. Okay, now the reason why that rule is there is because we don't want to be taking trades where price has already moved a long way away from the averages. So what you'll normally find in most markets, in fact any market on a daily chart, is that price moves away from averages, pulls back towards them again. Moves away, pulls back towards them. And the further away price moves from the averages and the longer it spends away from the averages, the more likely it is to come back. Now, more money has been made trading trend than any other method in stock indices, and in Forex you can still make good money trading trends as long as you're not looking for those 3, 4, 5 to 1 trades. Now, with regards to the setup itself, you can see these pin bars that I've marked out on the screen in front of you. So, you can see the arrows down the chart, and essentially these signals, the way that you would trade them are just a 1-to-1 reward to risk ratio. And you're buying a couple of pips above the high, a stop loss a couple of pips underneath the low to account for your spreads, and you're looking for a 1-to-1 reward to risk ratio. All right, now let's just walk through this step by step so you can see exactly what I'm talking about. Okay, so first of all, the way that you're going to want to place your entry level here, you're going to be placing buy stop orders in an upward trend, and you're going to be using sell stop orders in a downward trend. Now, let's just grab the entry level. You're going to be entering above the high of the candle, plus a couple of pips. All right, so plus the spread, plus a tick is enough. And your stop loss is going to go underneath that candle, and your take profit level is going to be a 1-to-1 reward to risk ratio. Now, I'm doing this using the lines tool on my one-click system, so you can actually see the reward to risk. There we are. All right, it's a 1-to-1 reward to risk level. So entry, stop loss, take profit. Now let's really zoom in and understand exactly what happens throughout this trade. You place the entry with a stop loss and a take profit. Now you don't know all this other stuff's going to happen. Okay, at the time you are looking at the chart like this. You have no idea what's going to happen next. Now you get triggered into that trade. Fantastic, you're in the position, but at the end of the first day you're actually losing money because this second candle here closes in negative territory, so you're actually down a little bit of money the first day. Now from there, the next day it shoots up, and then the third day hits target. There's no moving stops. There's no moving targets. It is a very simple 1-to-1 reward to risk system, pin bars in trend. Now, over the last decade, that's achieved a 58 point something percent success rate. I can't remember the point something, but 58% success rate at 1-to-1 reward to risk across a bunch of different markets makes money. All right, now, while that trade's busy running, okay, you also have a second pin bar here that you can see. And just like before, you'll be entering just above the high of the candle. Your stop's going to get tucked neatly underneath it. And your take profit, your reward to risk ratio will be that 1-to-1. Let's just click and drag it there we are, into the right position. And this candle here, the higher this candle as it goes up, is actually going to take you out of both of these trades on the same day for the take profit. Fantastic. Now, if I just get rid of those lines for a second, this next one is a really good example as to why 1-to-1 trading as a beginner is actually the way to go. So I'm using this because it's visually easy for you guys to see exactly where the entry, stops, and targets are going to go. Just grab those. Entry, stop. Visually, that looks about right. Okay, let's just zoom in again. Get the entry in the right place. Get the take profit in the right place. Now you can see here that a 1-to-1 reward to risk isn't quite going to get hit. So you've won your first two trades. Your next one here is going to be a loser. Now as we carry on, you have a nice pin bar here. We've got ourselves an entry level just above this candle. A stop loss just underneath. And a take profit level 1-to-1 reward to risk, which is going to be ballpark there. Okay, so you're in the trade. At the end of the first day, you're losing money. Second day, you're slightly in profit. Third day, a little bit more in profit. It gradually ticks along, and about a week later, hits your take profit level. Okay, there's another one here which hits target in about 3 or 4 days as well. Now, the reason why I'm showing you this is these trades typically last anywhere from 1 day to 1 week. You're looking for a 1-to-1 reward to risk. We aren't talking about anything insane. You're not talking about crazy high success rates. This is realistic trading, what it's going to look like. Now, a couple of wins, a loss, another win, and then this one here being a win as well. Great, fantastic. But I've picked the Nasdaq chart, which is quite simply pointing in one direction and one direction only. Now, if we flip things around and go to, let's say, euro pound, a currency that isn't trending as well, we can now look at this in a more realistic manner rather than finding the best upward trend that I can possibly find. So, you can see here I've got some arrows just appearing on the screen so that you can see the different pin bars giving us the signals. Okay, and these are all bullish pin bars with long tails. All right, and those bullish pin bars with long tails are the trades that we're going to be taking. Now, just like before, your entry is going to get above this level here, stop loss underneath, give it a couple of pips either side, and your take profit's going to be a 1-to-1 reward to risk ratio. Now, the high of this candle here, if we just have a quick look, high of that, 89,204. So, the way that you trade it, you'd be going entry level, and the high of that candle is 89,204, so 0.89204. And we're just going to add on 2 pips onto that, so 224. Your stop loss level is going to get tucked underneath that low, and the bottom of that candle is 88,658. So let's double check. Just reading it from down the bottom off the screen here. So the low of that candle is 88,658. And then we want to take 2 pips off that, so you're going to go 63.8. Now, a couple of the symbols, some of the like pound New Zealand, for example, is going to have a slightly wider spread. So as a result, you might need to add 3 or 4 pips depending on the spread. But basically, you're just giving it the spread plus 1 pip either side of the candle. Unless you trade through some crooks that happen to have 10 pip spreads, a couple of pips is going to be sufficient for most symbols. Now, the take profit reward to risk ratio will make 1. And we're just going to go ahead and I'll place the actual order so you can see it. Buy now so you can see exactly what the order is going to look like. Now, Euro Pound has one of these smaller daily ranges. So this here is only really a 60 pip stop for around a 60 pip target. And you can see there in a couple of days from this particular signal candle here that you're getting triggered into the trade the very next day. Day after that, you're hitting target. Trade's completed, job done, just delete it, and you're then waiting for your next signal. So we then have this signal here. I'm just going to leave the arrow there so it's easier to identify. And we're going to be entering above the high of this candle, stop loss underneath, couple of pips either side, and then my tool here rather neatly works it out for me. So the high is 89,291. And of course, I want to add a couple of pips onto that, so that's pretty simple. The stop loss is just going to go underneath the low of that candle. The low's 88.82. And therefore, pretty simple to add the 0 on the end of there rather than the 88.82. So I'm just dropping it down 2 pips. The take profit's automatically worked out for me because, again, my tool here has a take profit by reward to risk ratio set as 1-to-1. Another cool thing that this tool's got is an expiry. So if I've placed this order, and this is one of the rules of the system, and the next candle does not trigger the trade, then you want the order to be cancelled. Well, I have that built into the extra software that I've got, and you want to be risking 1% per trade. From there, I go ahead and place the order. Entry, stop loss, and take profit are in place. You can see here you get triggered into the trade, hit target, same day. So fantastic there, 2 trade examples. Let's just go ahead and delete that, move on to the next trade setup. We then have this one here. And you can see there we've got the pin bar. The lower this candle is obviously lower than the 8 moving average. It's an upward trend. It's a valid trade. You don't need me to point out the fact that this has been triggered. You can see the high of this candle is higher than the one before it. You would have been triggered into the position and it would have run for the 1-to-1 take profit. So again, the way that you would trade that normally on the MT4 platform is you'd go to right click, you go trading, you'd go to new order, you'd go to a pending order, and ordinarily what you'd do then is take the high of this candle. Well, it would have been a buy stop at the time, but high of that candle is going to be 89.86. Add a couple of pips, so up to 88. Stop's going to be the bottom of that candle, which is 89.114. Then you take profit level. You've got to work it out for yourself. So ordinarily, to be honest, the easy way to do it if you're just using MT4 or standard is to cheat, not put a take profit in, and then click and drag it manually. You'll see what I mean in a minute. You, of course, have to then go and work out your trade sizing on your own when you haven't got this tool, and you need to go and use a trade size calculator. That is not 1% risk. That is one standard lot. And you want to go ahead and go to a trade size calculator, work out your trade sizing, which, of course, that tool's doing for me. But you'd go ahead, you'd have to work out your expiry time and everything manually. You'd place the order. And then once you get triggered into the trade, then you can drag the stop loss, drag the entry level to create a take profit. Or alternatively, you can add a take profit of, let's say, 0.91, just throw it on there. And you can actually hover your cursor over it. It'll tell you. So the pips, it's 766 pips. So I can sit there and I can hover and I can work out 766 is pretty much 77 pips. So I can work it out, drag it into the right place, and that was pretty simple. Otherwise, of course, with my little tool on the left here, I can instead just type in the entry, stop, and target values. So entry goes above here, 89.88. Stop loss sits underneath the low, which is 89.094. Take profit gets worked out for me. Go ahead and click buy or sell. I want to buy. And entry, stop, and targets already pre-populated for me, which is pretty cool. The other nice thing is that I've got the tool, what we're on, Euro Pound. I've actually got the software here that finds it for me as well. So you can see here there's an arrow underneath, green dot for take profit, red dot for stop loss. And the two trade examples that I just went through and showed you there, if I just delete that and zoom in a little bit, you can see that these are the previous signals that were found there as well. So that's a pretty easy example for me to show you in an upward trend. We flip things upside down now and look at a downward trend. And here now, flipping things on the dollar Swiss, which is in a downward trend, you can see all these arrows pointing to the downside here. So arrow pointing down, down. These are the sell signals that this particular system identifies. And because now we're in a downward trend, we're looking for a bearish pin bar. So the body of the candle wants to be towards the bottom of the candle, and you want a long tail this time to the upside. And basically what we're looking for is to enter underneath, less 2 pips, stop loss 2 pips above, and we have a very simple 1-to-1 take profit. And you can see here, entering underneath, you'd be in the trade, still in the trade, wetting yourself slightly, placing a second trade now while this one's still running, and this day the market drops and both of these trades go on to hit target. The reason why they're trade setups is because now the downward trend, we're looking for the high of the candle. Okay, the high of the candle must be touching this 8 moving average or above. All right, so as we carry on through here now, we can see we have ourselves a signal here. Here's a bearish pin bar, and obviously the high of this candle is touching this moving average or above. In this case, obviously above. These ones here are pretty much touching, but they're definitely above, so that's good. This trade also won, and this trade is currently around the break-even level. It's not quite hit target yet, but it's also not hit stop loss, so it's still running. Now, as we flip things over and look at a different market again, let's look at, I don't know, pound Aussie. And you can see through here, these are all the different signals in the downward trend this time. And I want to just point out this one here is not a signal because it did not touch the moving average or above. It's definitely a bearish pin bar, but it's not a signal. Similarly, this was, too far. This was not a signal. This was not a signal. Because while they were bearish pin bars, they were not in the correct location. They were not touching the moving average. So here's your arrow pointing down for a sell signal. There's your take profit. Now it took 1, 2, 3, 4, 5, 6 days to hit target, but it got there. And then these other 3 ones that I've highlighted were not valid trades. They were just bearish pin bars. But you want the ones that are actually bouncing off the averages. Here we have a bearish pin bar. A couple of days later, hitting target. Another couple over here, and they're hitting target down here and over here. So some of these taking a little bit longer, about a week or so, but they're getting there. And others here, very nice, short, sharp, quick trade, 1-to-1, hits target comfortably. And then the most recent signal that we've seen is this one here, which has not yet been, well, hasn't been triggered, and we're waiting for the next signal to set up. Now, the reason why I'm going through and showing you this particular system is because it's something that you can actively use to generate consistent profits on a regular basis. Now, it is not going to make you a millionaire overnight. It is not going to make you $1 million in the next year. But it will get you profitable. And then the whole point is, as a professional trader, you want to be adding a variety or a portfolio of different trading systems. So you don't just want to run one system at a time. The idea is to try to run several. And by doing that, you have some that win at different times, some that lose at different times, and the bad patches get covered by opposing systems. And obviously the winning patches are bigger. Now, that's going through and looking at both upward trend and downward trend. So a quick summary of the rules for you again. In an upward trend, like this Australian dollar, through here, for example, we need to have the 8 above the 20. We need a pin bar at the averages. So the pin bar must be a bullish pin bar, and the lower that candle must be touching the moving average or below. Go to a different chart again. Here's some more signals. Okay. This here is one winning trade, one losing trade, one winning trade. And if you remember earlier, I said it's around a 58 to 59% success rate. So not sky high, but 1-to-1 reward to risk. You've now got something that you can use to generate consistent profits. And in a downward trend, we've got pin bars. All right. And the signals being generated here, something that my members get. But you can generate these signals. You can identify them yourselves manually. But members, of course, of my Ultimate Trader program get these included. Now, going through, you can see the different entry stops and targets. Entry being the bottom of the candle, that's a couple of pips. Stop, take profit. Here's a second one, third one. I mean, all of these 1, 2, 3, 4, 5, 6, 7 trades in a row of one there. And at the very end here, you've got one trade that's lost. Now, even though there's 3 different signals here, you would not get triggered into this one. This one got triggered and got stopped out, and this one hasn't been triggered yet because it's just the new day. But that's going through and giving you a system that you can use consistently on daily charts only. And it's a simple Forex trading system for beginners, again, on daily charts. Now, I'd highly encourage you at this point to go through and view my free training that's available in the description. So if you click on the description, you better see a few different links in there. I've got a free training that goes through and shows you step by step exactly what's required to become a profitable trader. This is step 1, but of course we want to build on top of that as well. And you can see the rest of that in the free training underneath this video in the description. Go ahead, click that, pop your email in the box, and you get instant access to it sent through to you via email. Other than that, of course, check out all the other videos on the channel and make sure that you do go ahead and click the subscribe button and make sure you click the little notification bell and go to all notifications. That way that you actually get notified every time I release new content for you that is designed to help you become a far more consistent, profitable trader. As always, stay safe in the market, guys, and I'll see you in one of my other videos.